Hello everybody and welcome to PAY360. My name is Tyler Payth. I'm a journalist here at the FinTech Times and I'm very, very happy to be joined by Riccardo Tordera of the Payments Association. Riccardo, how are you?
Very well, thank you very much. Thank you for having me. I'm Riccardo, Head of Policy and Government Relations at the Payments Association. And I've been having this role since the last few years when I moved from central banking to the space of, more industry-based and industry-focused industry. So I'm very happy about this.
Thank you. Well, it's great to have you here with us. Thank you for taking the time. Obviously, we're in the midst of a very busy conference at the moment. What do you make of PAY360 this year, now that we're on day two?
Well, day one was a huge success. Yeah. Day two is even better. I think that today is more relaxed. Like yesterday was the first day of also like having so much engagement. We've seen numbers that we've never seen before, and this is great. I think that all the organization team has done a very good job bringing together around 3,000 people registered. It was a huge effort, but this means that the industry is growing, is thriving, which is why what we do, not only in terms of events, but in terms of policy shaping, is becoming more and more important.
Well, that's a really, really interesting point that you pick up on there. In terms of the conference is obviously looking at everything to do with payment technology. We're looking at things like contactless A2A payments, embedded banking, and especially, of course, digital currencies. How do you think the landscape around digital currencies is and will evolve? And how do you think it's the role of policymakers and providers to ensure that what that future looks like?
So this is a very interesting question. I think that the digital currency space has evolved, and it has started from being a private sector initiative, or I would even say private sector, I would say some nerds initiative that started to code and mint money. And then there was a Bitcoin coming up, and after that various other kinds of digital currencies have emerged. And the regulators and the policymakers have been just watching and observing, at first without understanding what was going on, and then now catching up. So this is the landscape now. We've got the crypto assets on the side, we've got stable coins that have emerged to trap the gains from the volatile crypto markets, and they're coming up as a new form of money, privately issued. And then we've got the states that have said, well, wait a second, we can't be left behind. We are the state, we need to continue to issue money, and so states are looking at central bank digital currencies to basically put their offer there as well. So I think the money is going back to be a competitive sector, not just when up to now we've been used to cash is issued by the central bank, but there have been times in history where money was also a private sector offer, and I think that we're going back there.
Okay, that's a really, really interesting take on how the industry has evolved. There's a lot of topics on that is sort of the central focus of the conference across these 2 days, of course. In terms of with the evolution of anything in finance, you're going to have a lot of regulatory developments, a lot of the advent of new compliance measures that have to be undertaken. How do you think that the regulatory landscape around the rise in digital currencies will accommodate its safe and effective use?
So I think that you can just look at what's happening everywhere in the world, where you've got regulators and legislators that are putting their hands on this new emerging form of money. And you've seen what the European Union has done with MiCA. You've seen what China has done with the testing of their own E1, so effectively the first big CBDC. Other CBDCs were issued by smaller countries, like the $10 was the first one in the Bahamas a few years ago. Going to the UK to see what the UK is doing, I think that now now we can see the Treasury being proactively working on this. The government is committed to ensure that the UK can remain a global centre for financial innovation, and particularly wants to become a global hub for crypto assets. That was what's said by Rishi Sunak, now Prime Minister, when he was Chancellor of the Exchequer exactly 1 year ago. And we've seen that now there is the Financial Services Market Act that's under discussion. It's in second reading at the House of Lords. It will be approved hopefully by summer, and this will give regulators powers to effectively regulate this. And also this will be done through secondary legislation, which I think it's fantastic because it gives the industry the opportunity of being properly looked after throughout its development. And the benefit of having secondary legislation is that you can maintain agility, so that you can adapt things as they move on, and not just having primary legislation, which is a little bit more stifled. So,
do you think that digital assets is the main focus of regulators right now? Do you think it's the most challenging area for regulators right now?
I think that there are many. There is open banking, which is clearly a very big topic. I think that the UK, so I would put digital assets and digital money, digital currencies into a sort of wider offer of how financial services can be innovative. So it's the innovation that happens in financial technology. The government has also recently followed through what was indicated by the Khalifa Review in 2020, early 2020, just before the pandemic kicked in. And it was a creation of a Centre for the Innovation of Financial Technologies, which is now the chair became Charlotte Croswell, who did an amazing job when she was at Innovate Finance. And when you see that the state, the nation, is behind fostering technology and enabling players in the market to test and experiment in a safe environment, that's when you can see that you remain at the forefront of this. So digital currencies are part of this big innovation effort that the UK PLC is doing, and we're here to do our part as well.
Of course, as you described, it's a very exciting area of the payment industry, and one that's moving very, very fast as well. And I think it's all very good to have these technologies come forward. But how can we ensure, by that I mean regulators, service providers, policymakers, how can they ensure that these end services are accessible?
So first of all, I think that there must be an enhanced partnership between private and public. So we tend to see that the private sector is always ahead of the curve, right? And that's because they are on the market every day. They need to grow, and then the regulatory side is always playing the catching up, which is not a bad thing. Sometimes an excess of regulation at an early stage could end up in a not in what you want to see, because if you put too many rules at the beginning, the players do not have enough time to test and move and create something that's effectively working. So what we need, we're still at the early stage of this, but we can see that now the regulators are looking at this, and I think that the approach that's been taken so far is correct. It's like, let's start from the good practices that we have seen, which there are. There is lots of misconceptions again, and maybe we can touch on that later, but let's start from the good practices, and let's use the same tools that have enabled what has happened so far to be successful. So one of the regulatory principles that has been applied to this new sector is same risk, same approach. So if in the end we're going to offer similar, just better solution, but of course no one is reinventing the wheel, right? So we are there to improve the customer experience, and we're there to improve and make sure that new solutions can offer better results than what was already there. Don't forget that in the end, we now do remember when we were young and you had to wait for a money transfer from a friend, you had to wait 3 days, and already it was a lot, like a shortened time than our parents there, right? Or we can see things with credit cards. Like, imagine that in the future we have offline solutions that can enable also those who do not have access to a bank account, but to still use a QR code. Now we think that only through phones or mobile phones we can employ innovation, but it's not absolutely true. We can create offline payment solutions that are inclusive even in the most remote areas, because they can go through, just a scanning of a code, and then that code gives you access to your digital wallet, which stores all your values that you have put in there. So this is the direction of travel, and this is a way that we can be and reach out to more and more people constantly.
Yeah, that's ultimately what the industry wants to achieve, to have as widespread adoption.
Going beyond banking, going to the underbanked, and going to the non-banked.
Yeah, absolutely. But
we live in a privileged world in the UK where these numbers are small, but there is the entire world out there where these numbers are huge.
But in terms of like when we see the advent of different payment systems like contactless, for example, anything to do with like digital payments, we also see an equal rise in the level of like fraud and illicit activity within those areas. Now that we're seeing sort of digital currencies coming up, as you've explained, how can we ensure that rise isn't mired by an equal rise in illicit activity?
So now this is always a complicated topic, because most people have preconceptions about what fraud is in digital currency space, and I think that we should look at where fraud and anti-money laundering and terrorist financing happens. This doesn't happen in the digital currencies world. So in such scale to say this is the source of the scam or this is the source of the fraud. It's uncomfortable to say, but traditional financial institutions are the ones who move those volumes that hide illicit transactions. So, and banks have becoming much better. They still get fined quite a lot in this space if you look at big international banks, but not because they are bad, it's because the systems we have in place are not there enough from a technology perspective to ensure that payment is perfectly licit. So it's not the bank's fault. I mean, let's clarify this, but that's where the grey areas are, and that's because the systems that we have developed so far are not yet there to be able to fight this in a better way. With digital currencies that use open sources, blockchain and things, you can see the transaction. It's transparent. So the element of privacy is who is the one who moved currencies from A to B. But on the blockchain, you can see where the transaction is, how the transaction moves, and that's up there. Like if you know how to look at it, you can find it. It's online. It's free. Everyone can access this information. So imagine a fully, central bank digital currencies world where all the movement of money can be under public watch, and that money will land in an already AML'd wallet, and it will move from an already AML wallet. So, I mean, I can't say that we're going to, reduce this to 0%, reduce crime to 0%, but that's the goal. That's the goal, nearly to zero. And like with this kind of money, it will be much easier because the levels of checks that you can do before that should prevent you from achieving bad results. They are still in place now because we do not have the technologies, but the technologies are coming up, and so we're there to. I know it's a little bit against the normal view that, like, there are illicit transactions in crypto, but there are illicit transactions in everywhere.
It is a difficult question to answer because there's so many angles.
Also, don't forget that if you do not regulate something, you can't pretend that actors play correctly, right? So, like, once you put in the normal levels of regulation, then you limit their ability to act actually in a bad way.
Just moving our conversation onto other forms of digital currency, namely central bank digital currency. What impact do you see the advent of CBDCs having on the wider payment industry? And when they do come into widespread use, how can they coexist with payment systems that we already have?
So I think that, things happen slowly, right?
Yeah.
And we are not going to have a full system, a fully digital money system for, I would say, the next 20, 25 years. So things are going to coexist. And so that's why we need full interoperability of the systems. Like, we need to make sure that everything, the old and the new work together. But also you can see from a central bank digital currency perspective that every nation is looking at it. And that's also because it's not just, one of the main prerogative of a state, of a nation, is to issue their own currency, right? So it's also becoming now a geopolitical race. This is what we have noticed last year when the US has entered this space with the executive order issued by President Biden in March 2022. We were in the early days of the war in Ukraine, and the US has realized how important would have been to be up to speed in digital currencies innovation. And if you read the executive order, it's extremely powerful to read how this administration in the US is trying to look at this in a way that prevents and safeguards our democratic values. So there is a debate on CBDCs, against CBDCs, that say that CBDCs are a way to control people. You can see there are bills proposed in the US today. Yesterday I was reading the news of some senators that are trying to enter bills that prevent the Fed to look at CBDCs. But on the other side, you also have other big jurisdictions that have started to deploy this, to test this over millions and millions of people. And there are I think there was like 3 million and 50 million wallets already using CBDCs in China as of last year. So you can't ignore what's happening in the world, right? Like, if we remain outside this big global shift, then we may happen to facilitate things that we do not really want to see. I mean, this is another topic, and I'm not going to talk about this, but we have seen Russia and China getting closer together in their settlement system. Russia is exploring the digital ruble. They're working on settlement with China. This is a big shift in the geopolitical equilibrium of who controls what. So that's why the West cannot remain behind.
It's a very, very big topic, of course.
It's a very, very big topic.
Yeah, it'll have to be for our next conversation.
Yeah.
But just to round off what we're already talking about, in terms of so much exciting stuff happening in the payment industry, as you've explained, what industry trends or developments will you have your eye on here at PAY360?
There are many. Open banking, I think it's one of the most immediate priority in the UK agenda. Open banking has been successful, but it can be improved. So we're still talking a lot. We need to see more actions. We'll see what J-Rock and all the rest will come up with this, but I think that open banking is a huge land for growth in the payments industry. And the other one is the natural evolution of e-money, which is stablecoins. So stablecoins are, a form of crypto assets which value doesn't change. It's not volatile because it's linked to mainly fiat currencies. Not only there are various models of stablecoins, but the fiat currency-based ones are the ones that the legislators are now looking at. And I see this as the natural evolution of what e-money were. So e-money has been a massively successful story in the UK, and I think that at the Payments Association we can look at stable coins as the S-money. So we get rid of the E, we move to the S, and that's the natural evolution of this. So stable coins as S-money, what does it mean? It means look at the good that has happened in e-money, improve it. So again, take the regulation that's in the e-money space, make it work for the stablecoin ecosystem, which is different. There are differences, they're not the same. There are differences. So take the good from from the e-money system, apply it to the S-money system, and strive with it.
Wow, fantastic. Well, it's been a pleasure to speak to you, and you've given us such a fantastic insight
Thank
into the digital payments landscape so far. Riccardo from the
Thank you very much.
Association, thank you.
Very much.